I think that a price rise in gold and then later silver is inevitable, if not imminent. And I'm not talking about a price rise from $2,000 to $2,100 or $2,200.
Rick Rule, a seasoned investor, shares his successful strategies in the resource sector. From grassroots discoveries to optionality plays and investments in out-of-favor commodities, Rule emphasizes the profitability of exploration and buying assets poised for an inevitable rise. With a track record including uranium's turnaround, he hints at the potential for similar opportunities in the current landscape of gold and silver prices. Watch as Rick Rule unveils his insights, revealing the patterns that have consistently worked for him in the dynamic world of resource investing. Let's dive into the video to hear the full thesis.
Four things have worked for me. Exploration has worked the best. Participating in a grassroots discovery is the type of success that is only rivaled by a technological breakthrough. I've been fortunate enough to experience things like Paladin, 10 cents to $10. Purina in Arequipa, 30 cents to $30. I've had a few of those, and they're really fun. Statistically speaking, the most reliable form of exploration success is the boring ones, the prospect generators. I've invested now in about 70 of them over 40 years, and I've enjoyed 22 takeovers, which is to say something like a 33% success ratio, which is stupidly high in exploration. But I'm unusually geared to exploration. I was also successful, very successful, in the early part of the decade of the 1990s in optionality, which is to say financing companies that bought deposits in commodities that were out of favor. That was very, very, very cheap. And we built companies in those days like Pan American and Silver Standard, buying silver in the ground for 5 cents an ounce when it was selling on world markets for $4 an ounce, thinking that those deposits, while valueless at $4, would be worth something at 15. And of course, the silver price went to 50 as opposed to 15. Optionality is no longer cheap, but it's something that works stupidly well for me in my past. So I really, and of course, I've made a lot of money by speculating in commodities out of favor. Uranium now twice. Uranium was so out of favor in 1998 that when I talked about it from investment podiums, the audience wasn't bored. They were hostile. They accused me of trying to profit from Hiroshima, Nagasaki, and 3 Mile Island. Ironically, 6 or 7 years later, when the stocks were all up 20-fold, the very people who hated me were asking for uranium stock tips. Somehow increasing price escalation obviates morality, I guess. Fast forward to 3 years ago. Uranium was a 4-letter word because it disappointed people in 2019, 2020. And by missing an out-of-favor commodity, people missed a uniform tripling or quadrupling of uranium stocks, including the low-risk ones like Cameco. So I've made a lot of money by buying things that had to go up.
In this next discussion, Rick Rule offers a compelling analysis highlighting the underinvestment crisis in the global oil industry and projecting a potential supply shortfall despite robust demand. He challenges the notion of peak oil demand, emphasizing global energy needs, especially for the billion people without primary electricity access. Rick advocates considering all economic energy sources, favoring those with promising prospects. Shifting to precious metals, Rick expresses a strong belief in a substantial and inevitable rise in gold and silver prices. Drawing parallels to the significant moves of 2000-2011, he envisions a 4-fold increase in demand as precious metals market share in the U.S. aims to return to the 4-decade median of 2%. Rick underscores the importance of investor self-awareness in navigating this sector for potential outperformance.
The oil industry worldwide is underinvesting about $1 billion a day in sustaining capital investments, which impairs their ability to produce. In the out years, despite the fact that oil demand will remain strong, oil supply will begin to falter. People say, what about alternative energies? There's a place for alternative energies, but globally, we've spent $5 trillion, trillion, on alternative energies in 40 years, and we've reduced the market share of fossil fuels from a high of 82% all the way down to 81%. $5 trillion has reduced the market share of fossil fuels by 1%. And North American natural gas, which is distinctly out of favor, is the cheapest sector of all. The price of North American natural gas, either in the United States or at AECO in Alberta, is something like $3.50 per million BTU, while the price of that same gas in Tokyo or Rotterdam is $8 per million BTU. It costs $1 to compress it and ship it. This is a stupidly broad arbitrage. The big thinkers, of course, would have you believe that peak oil demand is going to occur in 2032. The Bidens and the Trudeaus and the noted energy physicist, what's her name, Greta Thunberg, would have you believe that peak oil demand occurs in 2032. They sadly, I guess, omit the fact that 1 billion people on Earth have no access to primary electricity. We need more energy worldwide. We need more coal, whether we want it or not. We need more oil and gas. We need more hydro. We need more geothermal. We need more solar, but not in Toronto or Hamburg where the sun doesn't shine. We need more wind, but in Lethbridge, not Vancouver, where the wind doesn't blow. You follow what I'm saying? We need all economic sources of energy. You need to look at the ones that have to go up, not the ones that could go up. I think if you have I think first of all, if you don't have a 2 to 5 year time frame, you're only going to make money by accident. Okay? So I'm speaking to those that have a 2 to 5 year time frame, those people who actually have a chance to make some money in their lives. I think that a price rise in gold and then later silver is inevitable, if not imminent. And I'm not talking about a price rise from $2,000 to $2,100 or $2,200. I'm not talking about a 30 or 40% increase in share price. I'm talking about an increase in the gold price that is more reminiscent of the move from 2000 to 2011. Perhaps not a sevenfold move, but I think a much higher move. And I don't think it'll happen in a time frame that's convenient to people. We've cited the statistic before that precious metals market share in the United States savings and investment market is less than 0.5%, which is to say that 0.5% of the savings and investment assets of Americans are comprised of precious metals related investments. Over 40 years, the 4-decade median market share is 2%. I'm not suggesting that gold will supplant the US 10-year Treasury or the Dow. I'm suggesting that fondness for it will return to mean, which will result in a 4-fold increase in demand. All sectors of the precious metals business over the 5-year time frame will do well. Whether or not they'll do well in 2024 is a very different question. But if you define who you are as an investor, how much work you're willing to do, how much volatility you're willing to endure, how much reward you want, you can define where you will be inside a sector which inevitably will outperform, I would suggest, the broad market.
Thanks for joining today's discussion with Rick Rule. To sum up, we explored the keys to his success in exploration, the potential of out-of-favor commodities like uranium, and the underinvestment crisis in the global oil industry. Rick also shared insights on the future of energy, emphasizing the need for a diversified approach. Transitioning to precious metals, he expressed a strong belief in an inevitable and substantial rise in gold and silver prices, urging investors to consider their risk tolerance and time frame. As always, your thoughts are valuable, so don't forget to like, subscribe, and share your opinions in the comments below.